Hej, jag heter Christian Rudolf. Jag driver ett sökbolag som heter TopDog. Jag var under en tidsperiod head of SEO på Betsson. Det är ett tag sedan nu, men det kanske räknas fortfarande.
Ja, jag är Christer Malm, som sagt. Jag har en bakgrund i branschen på ganska många roller. Har varit Head of Nordics på både Sportingbet, 888, Head of Marketing på Betfair och började som country manager på OnGame. Och nu driver jag alltså Oddsio.
Erik Bergman heter jag. Jag är en av 2 grundare till Catena Media. Satt som vd där tills för 1,5 år sedan. Är numera strategichef och jobbar primärt med våra M&A-frågor.
Marcus Tejman heter jag, vd för Netgaming, och vi förvärvade Highlight Media nyligen och flyttat ner till Malta för några månader sedan för att jobba ännu närmare verksamheten. Jag har varit i spelbranschen sedan 2004-2005.
Ingen dålig panel. Då ska vi se, jag skulle börja inleda med en fråga som handlar om affiliatens plats i värdekedjan. Och ett tag så pratades det mycket om, och jag var själv av den uppfattningen, att i takt med att operatörerna konsoliderar så blir de stora, stygga, de bygger sitt varumärke på TV, behovet av affiliates minskar, deras förhandlingskraft minskar. Men det verkar inte riktigt ha blivit så. Och hur är det egentligen? Vad är er perception och hur kommer det här utvecklas framöver? Återigen Christian, du kan få börja om du har en uppfattning där i frågan.
Nej, jag tycker ju personligen inte att de har så stor plats i värdekedjan, och det beror mycket på att Google inte gillar dem. Men det är uppenbarligen så, om ni plockar fram era mobiltelefoner och gör en sökning på olika sidor just nu, så är Betsson på sida 2. Och de har ju typ 10-15 man som jobbar i SEO, så att ur det perspektivet finns det ju en plats. Så det krävs ju fortfarande att man gör det väl. Och gör man inte väl så blir det plats.
Så nuläget så finns det ju en plats för affiliatesen eftersom operatörerna inte gör sitt jobb då.
Ja, Erik är ju ett levande bevis på det.
Och hur kommer det se ut om 1 eller 2 år? Kommer det förändras i status quo eller?
Jag tror att det kommer ganska mycket status quo. Skandinavien är en ganska liten plats på jorden i Googles ögon. Och det kommer inte hända så mycket på de stora operatörerna som ändrar sig. Så att jag ser inte att det ändrar sig så mycket. Det finns någon affiliate som kommer att skjuta sig i foten, men det ändrar ju inte totalen. Tror jag.
Christer, har du någon annan uppfattning eller lite samma sak där? Eller?
Ja, alltså jag tror ju att lite grann det vi är inne på också, det är att en bra affiliate tar en lite annan plats i den här näringskedjan och börjar jobba närmare med operatörerna på så sätt och kanske även närmare själva kunden. Det är min syn på det. Så att, men sen är frågan, gäller det just sökmotoroptimering och så vidare, det är en annan punkt utifrån mitt perspektiv. Så att, men jag tror att upplevelsen frågan just kring affiliates i näringskedjan, den tror jag snarare kommer att öka.
Okay, would you please be so kind and step a bit further there so we can get on the scene our 5th panel member. I'll make the introduction if it's okay.
Of course.
It's Charles Gillespie, CEO and co-founder of Cax Media /gambling.com. And we started the panel a little beforehand. That has actually never happened in the history of this event, or any event whatsoever, I guess. But the other gentlemen have had the opportunity to introduce themselves, and I've asked the question of how they view the position of the affiliates in the value chain and today and going forward, because there has at least I thought that the affiliates would be kind of muscled out by the operators once they consolidate, and they would have more substantial pricing power than the affiliates. So, and we've heard 2 gentlemen disclosing their thoughts, and now it's time for Eric. What's your view on this?
I would say that the affiliates have a very substantial part of the value chain and will remain so, both with more advanced products where you actually can very easily look at them, that Adsium is saying, but also from an SEO perspective, I would have the complete opposite opinion of Christian, where I would say that the common user behavior is that you want to find as much information about something. You want to know what it is that you're buying. You want to know what it is that you're looking at. So people go to actually search for information, and it will be very tricky for a casino or a sportsbook themselves to hand out information without being super biased. So the visitor will want to come to a place where they can compare and get a very easy overview of everything and take their decision based upon that. So today there is a very large portion, probably about 40% in Sweden, of the traffic that comes through affiliates, and I don't see that changing at all, probably to the affiliate advantage rather than on the operator side, if so.
Okay, and Marcus, what's your take on this?
Yeah, I totally agree with Eric. I also think that affiliates will focus even more on delivering value to the visitors and to the end customers by writing rich content, reviews of both gambling sites, but also payment solutions, specific games, and so on. So I definitely think that we will still be in the value chain and even to our advantage.
Charles?
I would tend to agree with Eric as well. The affiliate space continues to move to more and more toward professionalization, and you've got a pooling of traffic at the top end now with Catena and XL Media and the other very large affiliates, and they're bringing to the table better deals. They're being rewarded for that volume. So as there's fewer and fewer small affiliates that have 100 players a month and more larger affiliates with better deals, I think the pressure is actually going to go up on the operators. And they're going to end up paying more per player over time as the affiliates continue to become more professional and larger.
Okay, operator panel, have you gotten the message? That will be interesting to hear your reply. Okay, and okay, there have been some concerns among investors that, Google has actually all the say in this, and they will decide whether you will exist or not, and probably, perhaps cut you out for some reason. But so basically, my question to you is, as an investor, how should you view that risk that Google is going to, penalize you guys? Please start, Charles.
Well, I think you have to look at it with a portfolio strategy. So if you've got one website, you've got a lot of risk, because if you lose your one website, you're out of business. But if you've got 20 websites or 100 websites or 3,000 websites like XL Media have, then you got options. You can play with things. If you can use a different strategy on each website. If one gets blown out, it doesn't matter. If you've got, so let's say 50 websites and you're doing kind of different strategies on each one, and none of them have had any problems. Maybe you're spending too much money on SEO. Maybe you're being too conservative. And if you had one blown out, you would know, you'd have a better grasp of where the line is, and you could perhaps spend a bit less money and be a bit more aggressive in your tactics and actually have higher margins. So I think it's like anything. You just need to manage the risks, but with a portfolio, you have options.
Thank you. Marcus?
Yeah, I think there is a risk from an investor's perspective with Google, obviously, but you as an investor, you need to do your own SEO due diligence also to look at link profile and things like that. But in the end, we always strive to deliver high value for the visitors. Obviously, like you said here, with many websites, you as a small affiliate player, you will most probably be blown out. But as long as you stay within the Google terms and conditions, I think that the risk is pretty low. Risk is a bit lower here in Scandinavia so far with the smaller market, but it's higher within the US.
I definitely agree with that. There's certainly less attention on the Nordic markets than there are in the UK and the US. You can get away with more here.
Yeah.
Eric?
Yeah, I agree with the previous speeches, but I would also like to add into it's all about the quality in the products. I mean, Google, sure, they have a big say in this, but Google wants to create the best possible product that is search. I mean, if you would look at it from TripAdvisor perspective, which is also an affiliate, if Google were to take out TripAdvisor from Google, Google would be a significantly much worse product than it is. And I would say it's about the same thing when it comes to the affiliate side of things. If you want to find something about poker, if you take poker listings out of that, it will be a significantly worse search result. If you do the same from a casino perspective, I would say if Ask Gamblers isn't there, which is one of our assets, I would say that there's a significantly worse search result. So from Google's perspective, they would want the great assets to be there, and they will remain there. And obviously, if you have a diversified portfolio, you can have a lot of really great assets, and you can decide to have less products where you have a bigger focus on the SEO and maybe less focus on the product. But as long as you have a couple of really heavy, really good products, you will definitely remain safe.
Chris, sir?
Yeah, my view is slightly different, I think, from everyone so far. I think Google, as important as they are, with what we're seeing about progress in terms of mobile development and in terms of mobile first, I think we're missing one point here, and that's App Store and Google Play. I think being visible there and ensuring that you're visible through either a product or brand name is even more important. So from our perspective, our strategy is clear. We're trying to build a brand that will be recognized per se and will be searched for, rather than generic searches in that sense.
Yeah, okay. And Christian, you'll have the last word on this.
2008, the current CEO of Google, Eric Schmidt, said, brands is how we sort this cesspool we call internet. There seem to be a genetic component. Please Google this quote. So already 8-9 years ago, Google knew what the average Google user wanted. It's not necessarily your websites, it's brand. A search result full of brands has a better user experience than a search result with less brands. So this is what's happening. If you take the 100 biggest websites in the world, they are growing a lot faster than the other ones. And this is the brand effect. And the reason it works like this is that the average user, when they recognize a link, they are more prone to click to it. And that's why brands make the Google search product a lot better. There is also a prediction from the Google user. When they applied for the patent PageRank, in one of the appendixes, they actually say a search engine with an advertising business model will sooner or later be biased towards the brands. And they did this already in 1996, 20 years ago. They already knew what was coming. And the reason it's taking some time in countries like Scandinavia is that they actually have a big problem in Scandinavia, because the indexes are so small. There is so little content, so you can get away with a lot more stuff here, which you are pointing out. But sooner or later, this is going to catch up with everyone. When? I do not know.
Very interesting. Any reply, Eric?
I totally agree. I think that it is a lot about the brand, but I would say that the affiliates might as well be the brands as well as the operators. I would say that Poker Listings is one of the absolute strongest brands within poker. I would say that Ask Gamblers is not as strong as Poker Listings within poker, but it's at least a very strong brand within casino. So I'm sure that there will be a lot about the brands. There will be less exact match domains and less about those things. But affiliates do serve a purpose as a brand just as well as the operators do. I mean, look at traveling. You have TripAdvisor, as I mentioned before. I would say that's one of the absolute biggest affiliate brands you can come up with.
Yeah.
Christian?
I don't know the marketing spend of your companies, but if I remember correctly, when I was like head of SEO at Betsson, their branding spend was like plus 500 million Swedish kronas. I mean, it's a shitload of cash, even for Catena. And that is just a lot of brand awareness, which affiliate companies do not buy.
They don't need to, but that's not the same thing as they can't do it.
Well, there are some affiliate companies that do branding.
Absolutely, but 500 million Swedish kronas, I mean, that's a lot of money.
While everyone's plugging their brands here, I've got to plug gambling.com as being
Absolutely.
a pretty good brand.
There is exception to the rule.
Sorry, I forgot about that one. Great sites.
We've done 2 national UK TV campaigns, which drove the business substantially, and have taken what was originally just a very good domain name and turned it into a brand, which has recognition and gets, can outperform in the SERPs in terms of click-through rate. So Eric's absolutely right. You don't have to be an operator to have a big brand. You can do it as an affiliate as well.
Okay, so any questions from the audience? No? Okay. We'll be serving drinks in the in the pause, so maybe we'll get more questions after that. Okay, a final question then, and yeah, like what will be the the most important competitive advantage you can have as an affiliate going forward? And Christian, do you want to answer that, or you want to pass because you're not really an affiliate?
No, I think I'm quite obvious. If you can build a brand, you have a place. But on the other hand, you might choose the other path, go really, really, really dirty when you do your SEO. That's also an option. You just do it on a scale that's big enough.
Okay, Christer?
Mine and Odsium's take is obviously a combination of brand and experience. So I think the user experience is really what it all boils down to in the end.
Eric?
And I would say it's all about the power of choice and information. We can provide a lot more information and a lot more options than the casinos can do themselves, and more than Google can do for that matter. If you try and Google something and try and get an overview of casino bonuses by just looking at the search result, you're not really going to get a good result from it. But click one of the top options and you will most likely get a very much better view of it and easy to overview. So I would say the absolute biggest edge is the power of choice and the search for information.
And I totally agree. I also think that by generating a lot of content and a lot of reviews and so on, I think that the traffic that we are generating to operators is of much higher value and quality than from other traffic channels.
I think in the business, on the affiliate side, obviously the key focus of almost everyone is on traffic acquisition, just getting the traffic in the door. And then it's quite easy to sell it. To get that traffic in the door, it's more than just about SEO and PPC. There's new channels now, there's programmatic, there's display, there's all kinds of interesting new things which affiliates really aren't getting into at all. So I'd say the number one thing is data. And if you've got cookies on your FTDs and you've got awareness of where they're coming from and exactly how they're behaving, you'll be able to retarget them and get at those same human beings, which aren't necessarily sessions or clicks or whatever, but it's the people that are actually the customers, and graduate beyond simply search marketing.
Okay, and so also commenting on investment opportunities and where you see money doing the most good. I know Catena, they have released, issued a bond, right? And Marcus, you have recently also financed an acquisition. And so it would be interesting to hear you guys telling the audience, if someone gave you not an unlimited amount of money, but somewhere close, how would you spend it? What's the best way to spend money? And Charles, I know for a fact you're in a capital raising process right now. What are you going to do with all the cash?
Well, acquisitions, obviously. There's a major trend toward consolidation within the affiliate space. It makes sense. In our business, if we bring on an extra website or two, we've already got 20 websites that we're managing. So adding one or two doesn't increase the costs substantially at all, whereas it could substantially increase the sales if the websites in question are quite profitable.
Marcus?
Yeah, I agree here, but also maybe adding a new vertical, new product to the existing business that we have. Maybe a new niche or for a new market, but I would also go for acquisitions without doubt.
Eric?
Yeah, I obviously agree from the acquisition point of view, but I would say the best spend is still like R&D and recruitment, but that doesn't scale in the same way as acquisition do. It's a lot easier to become big by actually scaling it with the acquisition side of things. And we are in a very good position as a company here with one of the few ones that are actually listed. We have a higher multiple than the competitors, and we're already raised bond cheaper than most others. So we will keep doing the same thing and keep buying what's out there.
Christer?
Yeah, from our point of view, it's investment in R&D and global expansion. We want to take the brand and the product global.
And how would you go about that? Is that
I mean, it's underway, of course. We are in negotiations with a number of large international media houses that might want to white label the product. So we're looking into that, and just generally, supporting more platforms. As I mentioned, Android. There's Apple TV and several other platforms that we wish to support.
okay?
So.
Christian?
Well, if I had 10-15 million Swedish kronor, I would probably build 5 top list sites and then sell them to Eric to like 5 to 8 times the money.
Go for it.
We can continue on the acquisition part. It's quite noticeable that the acquisition multiples is lower than most public companies trade at. Could you comment something on why are there a large disparity between the acquisition multiples and the trading multiples? Maybe Charles, you can start.
Well, another way to look at that question is why would somebody sell for 4 or 5 times EBITDA and when they could be a publicly traded company at a multiple potentially 3 times that amount?
Yeah.
And the answer is a lot of these people are just not that sophisticated. I mean, these are people that build websites for a living. So a lot of cases they're quite geeky and they're quite into the website side of things, and it takes a fair amount of education and background and experience to come up here and try to float a company. So it's just not an option open to everyone. And I would probably say that a lot of the people selling for 4 or 5 times EBITDA, I mean, they never even considered that. It's not on their radar. It's not something they've ever really thought about. And the idea of getting a couple of million euros through the door and buying a Porsche and doing even less work than they're already doing would be very attractive to them. So yeah, it's just there's just a gap there. It's two different types of people.
Marcus?
Yeah, I agree here. We also have an overhead, big departments in the verticals that we operate in, with a high EBITDA margin of 65-70%. So to us, adding the revenue and the traffic from those sites, we actually can have higher valuation than these smaller affiliates then.
I would say that the biggest difference is the risk perspective of things as well. If you have one site, as Charles touched upon earlier, and that site is gone, then you're in a very tricky position. If you have 20, 50 or 3,000 and one site falls, then you still have your organization, you still build everything around it, and you can do this. And most of the acquisitions that we have done, we've bought something directly from the owners. They have been either the only or them and just very few employees. So they've been the key staff, and they have not really been included in the price in the long term, because it's really hard to keep someone motivated if you give them a bunch of million euros. So by putting them out of there, that's kind of gives you a cheaper price of what you're actually buying. Because if you're buying into us, well, we're not really down to 2 or 3 key people. We're a bunch of very important people that then learn this and develop this together. So there's a big difference in the risk. Then you get a lot of assets and a lot of staff and a lot of technical development behind that we never get when we buy something. Well, very rarely get when we buy something.
Christer?
Yeah, well, I tend to agree with Charles. I think that it's a matter of who you're dealing with, and of course the money up front. Everything has a price ultimately. So the way that we view it is of course that we want to make sure that we grow. And I think if you look at different segments of or categories of people, as Charles mentioned, that you have the sort of typical web developer who might have developed something that's ultimately easily sold and quite easy money after a while. Then I can understand why some people do it, whilst on the other hand some people really want that challenge and want to continue developing the product or brand or whatever it is that they got. So I think that's what it boils down to.
Christian?
I'm not sure I have too much to add. I think I agree a lot of what Eric just said.
Okay. Then I believe the time's up.
Yeah, unless we, for some unexpected reason, have some questions from the audience. No. Okay. Yeah, please go ahead.
I'll direct my question to Charles because you brought it up with additional display opportunities and different. I assume you're referring to Google's traffic search, but also display ads and things like that. My question to, I guess, some of you is, how do you get around the rules and engagement where Google is trying to force this to be displayed?
Okay, so I have to repeat the question for the recording. Basically, if I understood it correctly, how do you get around Google's rules, right?
Yeah, I mean, you're in a way fighting them with something you want to reach out to an audience, but they're sort of trying to block that, I guess, because they're not openly saying that it's allowed, because we're not a regulated market here in Scandinavia,
Right.
Sweden.
So yeah, because the question is implying that you're some kind of guerrilla segment here, that because Google is not supposed to be allowing ads in Scandinavia since it's not a re-regulated market. Correct? Yeah. For display and other. Yeah.
Well, our biggest market is the UK, so UK is regulated, so that's less of a problem. I wasn't specifically thinking of the GDN, the Google Display Network, but yeah, Google can be quite difficult, and so can Facebook in terms of gambling advertising. But more broadly speaking, in terms of programmatic, you've got a lot of different exchanges now. You've got all kinds of different publishers, and while there's always going to be things slowing down the gambling industry because it's gambling, there isn't a blanket ban. You can do things on those ad exchanges, and I definitely see that as an area of growth for the whole affiliate sector. But it's going to take very sophisticated affiliates to take advantage of that.
Okay, anyone else want to comment on the question?
There's plenty of Eastern European agency that will help you hack the semi-open advertising systems that you can hire.
I hope these gentlemen are not among those.
We are not.
No.
Okay. Thank you very much.
Thank you.